The markets are flexing. Are you reading the signs or waiting to be surprised? Welcome to Daily Market Waves by Investing Angles, where every candle speaks, every Elliott Waves whispers, and we chart the turn before the herd even blinks. Today's video is available to the public immediately, but don't get used to it. Once the signals align and things turn critical, access will be members only for 2-3 days before public release. If you're watching now, you are ahead. Stay there. On the radar today, volatility, a healthy mix of candles, or not so healthy. Yields and TLT, we are issuing a technical alert. Dollar, still searching for direction. Natural gas, bulls are in control, pushing higher. Oil, bounce failed, prepare for the next leg. Gold, on the verge of a major shift. Silver, more decisive than gold. S&P 500, no candle decision, but technicals are ringing alarms. Full sector and large cap breakdown. Nasdaq, an Elliott Wave update that could reshape your strategy. And the feature of the day, Meta, our April 22nd call, hit spot on. We nailed it in the Discord and in our video. Did you follow? Good. Now let's start with our daily discussion, and as usual we begin with Volatility Index. So these are the daily candles for the index and the futures that we usually track. So the candles are bullish, the candles are bearish. For the index it's an inside down, and for the futures it's a strong dark cloud cover. Most likely we will see the red day tomorrow. The index will go lower. However, I'd like to say that technicals are strongly opposing this move, and the volatility might be seeking bottom very soon. And if we just zoom out a little bit, this is a 3-day candle which also closed today. So this is a clear bearish bullish harami, a clear bullish harami, all entirely within the range of the previous candle. And for the 3-day it's even stronger. Again, this is a harami and a hammer at the same time. So now we have a good chance to see it confirmed in the next 3 days. So next third day will be on Monday. But before that, we might see a lower low. This is quite typical for haramis. And if you remember the weekly closure was a failure, bearish failure. Now we are looking for a continued, for potentially a reversal upward. And just we are tracking this Elliott Wave. Potentially this is forming a bottom right now, and volatility has been up and down for quite a while, for almost 2 weeks. Let's see how it moves from here. Most likely it has already formed a very solid bottom. Once we have a very clean reversal formation, then we would be looking for an updated target. So that's volatility. Now let's have a look at the bond markets. So what are they telling us? That this is the 10-year yield. What we are seeing, a confirmation of reversal on the daily frame, only on the daily frame, and there is a chance that the yields will move down next day or next couple of days. However, if we look at the 3-day frame, which also closed today, this candle most likely is just a posing candle or consolidation candle before moving higher. This was a very strong, the green candle was a very strong piercing line, and now this is a consolidation. Potentially now we would be looking for a way higher. And the same thing happening on the weekly frame, this big bullish engulfing, followed by 3 consolidation candles. The next candle could be higher. So we are patient, we are watching. And this is the Elliott Wave chart for the 20-year government bonds yield, which is an inverse counterpart for the TLT ETF. And now we are looking for potential impulsive wave here, and this is possibly a pullback for wave 2. If this hypothesis confirms, then we would be looking for something like this. Well, let's see how this wave down moves. So far it looks corrective. The question is where it stops. If it stops on the channel, that would be a perfect scenario. It would just reconfirms the channel slope. Well, now let's move on to the TLT, and there are a couple of concerning things here. So I'd like to start with the 2-day frame. So on the 2-day frame, we have a bullish engulfing. We would be looking for higher prices. However, I wouldn't be very optimistic at this moment because this formation is still below all resistance lines, and it's been rejected at this point at the 8 periods EMA. If we look at the daily frame, there is a reason for that. We can see this potentially a spinning top, and it was rejected also at 8 days EMA. And now, even though we might have a higher price here, the chances for a move lower are fairly significant considering the technical support. And now let's return to this 2-day frame again. So what we are seeing here, and I'd like to emphasize it, this is a cross, which will happen most likely tomorrow or the day after. So right now it's sitting just, what, 1 basis point apart. Most likely it will happen. This is the 100 over 200 periods. So technically from the days perspective, it's like 200 over 400 days. And this is a very significant one. If we look back into history, so the last time we had this cross, so this cross we need to search quite a while. So this was the last time it happened. So it was here. And it was what day? It was May 2021. So since then, we can see a beautiful path downward, and this is what happened. So now what we are looking for is that TLT tried hard to reverse this cross, but it looks like it is failing. And well, the consequences we would know. So something very significant and very strong. If you watched our video over the weekend, and especially our monthly update where we discussed multiple candles, and also for those who are interested in bond market, you can also search for our annual update. It is very educational and it covers a lot. I think it was available in the first days of January, and it's still there. Well, that's the perspective for TLT, for the bond market. And as a quick reminder, the candlesticks are bearish on the weekly frame for TLT. Speaking about the Elliott Wave, no surprises here. The chart remains the same, potentially an impulse down and the corrective wave upward. So far, it could be wave 2, and once we have a reversal here, we would be looking for wave 3. However, there is a possibility of extension here, but we are not talking about it yet. So far, we are looking for bearish continuation. Now let's talk about the greenback. So it is closing in 1 hour 13 minutes. So far the candle is neutral bullish. If it closes like this, I would be slightly bullish, but closer to neutral. We would need to see a very strong confirmation for this one. So far, dollar yesterday confirmed a reversal on the daily frame, again on the daily frame only. And now if we see a continuation here slightly down, it would be absolutely normal. However, the odds are closer to neutral on the daily frame. The weekly is barely bullish. but we need to see how it closes on the weekly frame. If we look at the chart right now, what is possibly happening here? I think that the dollar is trying to form either a bigger wave ABC, or more, this is not an ABC, it could be an WXY. So this possibly wave 2. This wave, this could be an impulsive wave. However, I'm not so sure about it. That's it has so many overlaps, and I'm leaning to think about it as a wave X of a larger correction WXY for wave 2. So if we see an impulse developed here, then we would be looking for a very strong move right over there, 102, 103 or higher. Well, that's the perspective for dollar. Now let's move to our commodities section, and today we start with natural gas. So the daily candle is bullish, however not super bullish, but bullish enough to consider another move higher. And I'd like to say that natural gas climbed over 50 days moving average, which is a fairly significant signal for the bulls. On the 3-day frame, the candle closed as a neutral. Most likely it is in neck candle, and after some consolidation, maybe for another three days, each candle here 3 days, we might see a move higher, and a freshly made 8x20 EMA periods bullish cross, and a few periods later we had another bullish cross here, 100 over 200 periods. Technically multiplied by 3, it would be days. So the weekly is sitting with a bullish candle of last week, and this week could most likely it's going to be neutral consolidation candle, but it's like an educated guess. Right now we would be looking for a true closure on the weekly frame. No changes to our projections, so this is either green or red path for on the large long-term frame. So this is May 7th today, and if we look at the smaller frame, there is a potential for an impulse. So I'm still thinking that the first wave of the bottom was impulsive. This wave 2 is somewhat shorter than I would expect for normal, and knowing the natural gas, I think there is a possibility of alternative wave 2 pushing it slightly down, scaring everyone, and only after we would see wave 3. However, an immediate move for wave 3 is also possible. If you remember, this was an ending diagonal for wave C, and ending diagonals tend to launch very strong impulsive waves. Well, that's the perspective. Another thing, this is a micro chart, 15 minutes, and I was looking for potential small count. So this could be an impulse. This could be an impulse for natural gas. But note that the last wave was likely an ending diagonal, expanding ending diagonal. So in this case, there is a very good chance for a return like this, for example. So this would be an ABC somewhere here at the beginning of this ending diagonal. So that's that would be quite normal, and after that, only after that, we would see another impulse upward. Well, that's a natural gas. Now let's talk about oil. Oil, as I discussed yesterday, be careful about the third candle. So it might start as a green one, but end as a red one. And indeed it happened. Now we see a strong dark cloud cover for oil on the daily frame. 2-day frame, 3-day frame momentum is not clear, but if you remember, we were discussing that this green candle wasn't sufficient enough to launch a rally here. We need to see a confirmation. So far it is failing, but it's closing tomorrow. On the 3-day frame, it's closed with a doji, and now we would be looking for confirmation for either path. And for midterm perspective for oil, so far it is following our path. I think that this was wave 3, 4. Potentially this could be wave 5, by the way, the strongest. It could be the strongest wave of the next leg. And waves 5 are typically longer than waves 3, 4 impulses in commodities. Well, so no changes here. And this is about oil. Now let's talk about precious metals and see what is developing right now for silver. So in 6 minutes 35 seconds, silver, it looks like it is going to form a bearish engulfing on the daily frame. Well, I think we can go on and return back in just 6 minutes after we discuss S&P 500. But what is happening with silver right now is that if we consider this as a bearish closure, then the weekly has a very good chance to either confirm or at least consolidate with after the bearish, very strong bearish closure of last Friday, and the 3-day frame after it's closed with a strong bearish candle. Now it is mostly consolidating with it, but this is for silver futures. Well, speaking about Elliott waves, so the main thing that happened today is this strong move down, and technically it I was looking for potential wave 1, 2, and looking for an impulse up. So this path has been invalidated. So now we would be looking for wave 2 somewhere here. And so this would be potential for wave 2. And let me put another color so it matches the green one. So this is possibility for wave 2. So the purple path remains on track, and we would be looking for something like this, and this would be wave 3 of slightly longer. So that's the perspective for the purple path. Let's see. So far this wave looks very strong, and if it develops like this, we would be looking for an impulsive, strong impulsive wave, potentially wave 3 of 3. So wave B, the blue count, is still on the table, and it would be somewhere here. So considering the size of it, yeah, I think that if we would be looking for either wave B or 2 at the same time, and wave C, well, it would be much stronger here. I think that we can blend it together with wave with the purple one, but we'll do it next time. Well, that's the perspective for silver. So we are looking for lower lows. And by the way, if no, not that's a false alarm. Okay, so now let's move on to SLV Trust, and today's candles is obviously bearish, very strong bearish closure on the daily frame. On the 2-day frame, we have 3 red candles, and now we can see that it's most likely turning down. On the weekly frame, there is a very good chance for a confirmation of this reversal on the bearish engulfing. Now let's have a look at gold. The next chart is here. So in 2 minutes 50 seconds, gold is forming a dark cloud cover, so somewhat similar to what it did here at the beginning of in the middle of April. So if it is confirmed tomorrow, then we are going to see another leg down, potentially stronger and longer than the current wave. So the weekly, it's not decided yet, and we will be looking for weekly closure on Friday. So this is the Elliott Wave as we discussed it yesterday. The chances are 50-50 at this point. Let's see how this wave develops. So far, the very first wave has been impulsive, and now we would be looking for a slightly bigger wave 4. And if gold moves here and somewhere here reverses and starts the next wave, that would be good. However, if it moves down here and break through this level 3269.27, and it would need to drop about 2.7%, well, it would clearly invalidate an impulse, and we would be looking for an either 1, 2, 3 of a bigger impulsive wave down, or at least an ABC formation. This wave would be then wave A. Potentially this would be wave B, and we would be looking for wave C somewhere here. That's another option, another possibility. Well, that's all for gold. And now, oh, not all. Another thing that I wanted to say about gold is the momentum. It's very interesting one developing. We discussed it already multiple times. This is a MACD bearish cross on the daily frame, and so far it stays. It's not reversing after today's move, and there is a very good chance that tomorrow, if we see a strong move down, we can get a freshly made MACD bearish cross on the 2-day frame, and this would be something worth discussing specifically. Well, and now let's have a look at the GOD. So this is clearly a bearish candle today. I would be looking for lower lows tomorrow, and depending what kind of candle it develops, we would be looking for potential formation and specific frames. So far, it could be a double bottom so far, but let's see how it closes. The weekly is clear. We know what to do. If it closes here, then we would be looking for a rally below this level, and we're looking for a bearish move. And now we can have a look at the closure. So the gold is closed as a dark cloud cover, and I'd like to check silver. Silver clearly made a bearish engulfing. Well, that's the perspective for tomorrow. So silver and gold most likely will be in red. Now let's move on to the next part of our discussion, and this is S&P 500. So to say shortly, nothing really happened today. The candles are neutral. The technicals are still deteriorating, and there is no clear direction right now for all indices: S&P 500, Nasdaq, Dow Jones, and Russell. If we look at the weekly frame, if we see no strong action from the bulls, the chance that the indices will form bearish harami or harami crosses, which would be not a healthy sign, potentially leading to a reversal. If we look at the technicals, particularly MACD bearish cross, it stays, and still have to get good chances to expand, but we still have to wait long 22 days. Speaking about Elliott waves, so this is potentially the chart that we discussed on April 22nd, and now it is S&P 500 still hanging in this target area, most likely trying to complete a diagonal, and the diagonal is looking like this. I'm still thinking that it had a very good chance to form another wave higher for completion of this diagonal, and potentially it can even surpass this boundary. So it would be, let's say, somewhere 58.25, 58.30, and only after that we will see a strong reversal. However, it's not necessary. If it makes another higher high, that would be good enough for a diagonal. And from the larger perspective, I am looking for right now for a purple scenario, A, B, C of a longer correction for wave B. However, it might change. So far this wave down has been corrective. That's why I am looking for purple one. But if it makes a higher high and then starts an impulse, we might be looking for an ABC in red. So this would be the direction for wave C. Now let's have a look quickly at the sectors. So no surprises here. So everything is neutral. Financial, technology, industrial, staples, all neutral. The only one which is bullish, fairly bullish, is utility, and healthcare potentially formed a harami candle, but I wouldn't be so sure about it until I see a very strong confirmation. So this could be a consolidation before moving lower. The consumer discretionary is neutral, and the energy, most likely it is building a bearish case. The main interest is here. So this is large caps and quite a few interesting candles here. So first of all, Microsoft. It had a chance today to form a very strong bullish candle, most likely considering a rally. However, it was rejected here and it ended with this harami candle, which has very good chances, I would like to emphasize, and this would be supported technically for a reversal. The same for Apple. Apple formed a clear bearish continuation candle, and Google formed a very strong bearish reversal candle. So this consolidation just triggered the move down. So something can happen with the other ones. I think that Amazon is somewhat neutral and got a rejection at the 50 days moving average, which is a concerning sign. We need to see the next move. Nvidia so far is bullish. However, the wave upward has been corrective, and we see this freshly made cross 100 over 200 days moving average. I think this move upward would be very limited. Meta, we will talk about Meta in a few moments. And Berkshire Hathaway, no changes here, and a freshly made bearish cross 8x20 EMA. Well, make a note and review our video that we posted a few days ago. Now let's talk about Nasdaq. So no changes in our short-term perspective. So far, I think that Nasdaq is forming an ending diagonal, an expanding ending diagonal, and has a good chance to hit the new higher high before resuming lower. And similarly to the past that we just discussed with S&P 500, it would be either purple one or the red one, depending on the next wave down and its character. All right, so we can see that while candles are not decisive. Technicals and Elliott Waves are projecting a move lower for S&P 500 and Nasdaq, and the majority of the large caps would agree with this. Now let's have a look at Meta, and this would be our final discussion of today's special feature. So what happened with our Meta call? So this was the February 19th when Meta was 701. This was our super call, and Meta managed to drop. I didn't even measure it, so it was what the drop, about 33%. Very nice. So later on, what happened? On April 22nd, there was a corrective wave A, wave B, and we said that Meta is going to rally here towards this target. And today, what we are seeing, Meta is sitting right in this target. So the chart remains unchanged. Now I can update it May 7. So now we are looking for a reversal here. And by the way, Meta made about 17% for just this little run. So if it reverses here, it will be a very nice bearish flag, potentially a very long one. So once we see a reversal confirmation, we will be discussing the targets and the next moves. So if we look at the candles so far, Meta is neutral on the daily frame with still some chances to advance a little higher. A critical thing would be to watch the weekly closure, and this is on Friday, something that we need to consider. And if this is our first update since the closure, the monthly closure, the Meta here is made a very strong bearish move on the monthly frame. And if we look at the 2 months frame, then we can see a bearish, strong bearish engulfing with a very good chance to advance, well, to drop lower. And this is another concerning point. This is a MACD bearish cross on the monthly frame. So far, Meta marginally made a cross in May. If it stays in May till the end of the month, then it will be recorded and we would be looking for something magnificent. I mean magnificent drop. Because, for example, the previous one, which was much lower, much smaller magnitude, caused Meta to drop 76%. Even if it drops 76%, right now it would be seeking about $190 price, let's say in a couple of months or maybe a couple of quarters. Well, that would be our estimate based on some statistical readings and the history perspective. Well, that's Meta. That wraps our discussion today. And I'd like to wrap it. If you found value in how we track the turns before they hit the headlines, now the time to subscribe and join the inner circle. Hit the join button to get early access to our videos up to 3 days before the public, and never miss a critical setup again. Our weekly digest is exclusive to members for a full week, and it stays the same. That's where the big picture turns come into focus. Got questions or ticket request? Drop it in the comments, or better yet, join the Investing Angles Discord where Master Trader Kyle and others dissect the market moves in real time. Share this with your trading crew on Reddit, Discord, X, wherever strategy matters. Like this video if it sharpened your edge. Subscribe so you don't miss the moment the next wave begins. At Investing Angles, we don't follow the market, we forecast it before the herd even blinks. See you in the next one.